A nuclear fuel company just went public this week, and it cut its own deal size in half before it even rang the bell. That's not a good sign, right? Usually. But here's the twist. This company might be sitting on one of the most important supply chains in the entire AI and energy boom, and almost nobody's talking about it. Today we're breaking down the Standard Nuclear IPO, ticker STDN, what actually happened, why Wall Street got cold feet, and whether this is a watch from the sidelines stock or one you actually want on your radar. Alright, let's get into it right now and look at the facts. Okay, quick facts first, because I know you're here for the numbers. Standard Nuclear priced its IPO at $15 a share. They sold 10 million shares. That raised $150 million. Underwriters also got a 30-day option to buy another 1.5 million shares at that same price. That's pretty standard. It's called a green shoe. It just gives the banks some flexibility if demand is strong. Shares started trading on the New York Stock Exchange under the ticker STDN. The deal itself was expected to officially close the very next day. And this wasn't some small regional bank doing the deal. BofA and Goldman Sachs ran the show as lead bookrunners, with Barclays, UBS, Evercore, RBC, William Blair, and Stifel also involved. That's a serious lineup of underwriters for a company most retail investors have never heard of. So on paper, clean deal, big banks, NYSE listing. Sounds pretty normal, except it's not the whole story. Here's the part that actually matters. Standard Nuclear didn't originally plan to sell shares at $15. They were targeting somewhere between $18 and $21 a share, and they wanted to sell nearly double the shares, about 18.25 million of them. Do the math on that original plan, and you get a company valued around $3.5 billion. Instead, they cut the deal size by more than half, dropped the price, and ended up pricing at a valuation of roughly $2.4 billion. That's over $1 billion sliced off the target valuation before the stock even started trading. Now, is that a red flag, or is that just the market doing its job? Because here's the thing, this isn't really about Standard Nuclear specifically. This is about investor sentiment toward the entire nuclear IPO wave right now. Let's zoom out for a second, because this is the context that actually explains the price cut. A handful of nuclear-related companies have gone public recently. Names like X-Energy and Deep Fission. Both of them are currently trading below their IPO price. And it's not just the new kids. Established players in this space, like Oklo and NuScale Power, are both down more than 35% this year. So when Standard Nuclear went out to investors and said, give us $3.5 billion, the market basically said, prove it. We've seen this movie before with nuclear stocks, and it hasn't ended great lately. One IPO analyst put it pretty bluntly. He said the rocky performance of recent IPOs is hurting demand for exactly this kind of high-risk, early-stage deal. So Standard Nuclear didn't have much choice. They repriced, they downsized, and they got the deal done, just at a much more conservative number. This is actually a really important lesson if you follow IPOs. The headline valuation a company wants and the valuation the market actually gives them can be two very different numbers. The market always gets the final word. Alright, let's talk about the actual business, because this is where it gets interesting. Standard Nuclear is based in Oak Ridge, Tennessee, which, fun fact, is basically the birthplace of America's nuclear program, going back to the Manhattan Project. So there's some real history in that location. The company makes something called TRISO fuel. Without getting too technical, TRISO is considered one of the most advanced, most durable nuclear fuel types out there. It's built for next-generation reactors, small modular reactors, micro-reactors, even fuel for space and national security applications. And here's the number that matters. Standard Nuclear says it's currently the only independent manufacturer of TRISO fuel in the entire United States. Think about that for a second. If the US is serious about building out a new generation of nuclear reactors, and multiple companies are racing to build those reactors, somebody has to make the fuel that powers them. Right now, Standard Nuclear is positioning itself as that supplier, regardless of which reactor company wins. That's what people mean when they call it reactor agnostic. It doesn't matter which small modular reactor company becomes the big winner. If they need TRISO fuel, Standard Nuclear wants to be the one selling it to them. Founder Thomas Hendricks, by the way, still controls about 61% of the voting power after this IPO through a separate class of shares. So make no mistake, this remains very much a founder-controlled company. Now let's talk numbers, because this is a story stock, not a profit machine. At least not yet. In the most recent quarter, Standard Nuclear brought in under $600,000 in revenue and lost about $7.7 million. That's a real gap. Revenue is growing year over year, which is good, but this is still a company burning cash while it scales up manufacturing. Most of that revenue right now comes from fuel development agreements and research contracts, meaning they're still in the build-out phase, not the mass production, cash-flowing phase. So if you're looking at this as a value stock, it's not that. This is a bet on future demand for advanced nuclear fuel, plain and simple. And that future demand story, that's actually the most important part of this whole thing. The US government has set a goal to quadruple the country's nuclear power capacity by 2050. Why? Because electricity demand is exploding. Driven by AI data centers, electric vehicles, and crypto mining, all needing massive, reliable power. That's the tailwind every nuclear fuel and reactor company is riding right now. It's also exactly why investors haven't given up on this sector completely, even with the rocky stock performance we just talked about. The IPO market overall has actually been picking up steam this year, but investors have gotten pickier. They're not just buying the nuclear story blind anymore, they want to see the numbers back it up. So here's the bottom line on Standard Nuclear. Good, unique position as basically the only independent US maker of this critical fuel type, big name underwriters, and a legitimate policy tailwind behind the entire sector. The caution flag, a valuation cut of over $1 billion before the stock even opened. A sector where recent IPOs have struggled to hold their gains, and a company that's still losing money while it scales. This is a watch the tape, don't chase the hype kind of stock, at least in the early days of trading. If you want me to follow up once we see how STDN actually trades in its first few weeks, drop a comment and let me know. And if you found this breakdown useful, hit subscribe, because we cover IPOs like this every single week. I'll see you in the next one. Thanks for watching.